In today's episode, we're going to focus on whether we should be worried about this recent rejection in Bitcoin's price action, understand the theory of the three macro triangles across time which always play out, and what does that actually mean for upside or downside going forward. We'll be talking about that in a lot more detail in today's video, while also referencing some time-tested principles that I've been sharing since 2022 and which have been playing out really well since then, and I think they're going to continue playing out. So let's dive into today's video in a lot more detail. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. But before we dive into it, a quick message from our sponsor. Our sponsor for today's episode is bitfinex, and they are a really great crypto exchange for you to consider for your daily crypto trading and investing. They are a no KYC, no VPN futures exchange, and their liquidity is on par with the top exchanges. Users can trade over 250 pairs with up to 125x leverage without restriction. And to celebrate our partnership, we're running a very special offer. From January 21st until February 21st, you can sign up using my link and deposit $50 and get $10 back, and share up to $10,000 worth of Trump tokens when you trade on bitfinex. Deposit reward will be distributed on every Monday and Thursday, and Trump trading rewards will be distributed after the campaign ends. The clock is ticking, the countdown timer is underway, and for more information, check out the link in the description down below. Thank you very much, bitfinex, for sponsoring this episode, and let's dive right into it, because we're seeing a rejection in Bitcoin's price action, and we're not even going to look at the lower time frames, because it's really important on days like these to really zoom out to the higher time frames to better understand the long-term trend shifts in Bitcoin's price action, because loads of people get really stuck in the lower time frame volatility, which really tends to just be noise when it comes to just zooming out when in doubt. And I just want to talk about where exactly in the cycle are we, and these reference points in price, which are the halving events for Bitcoin's price action, a fundamental shift to the Bitcoin protocol. Those reference points for price, those are really useful points of understanding. And if we just do something like this, whereby we have the halving event and we start to the parabolic price action for Bitcoin, the moment we break beyond old all-time highs, which is this black horizontal here, we break beyond this resistance and start the parabolic upside phase. That parabolic upside phase begins a certain amount of time after the halving event. So let's just do this, and across time you can see that this is roughly a similar amount of time, and you can see that it's quite similar here as well. But we really need to talk about where in the cycle are we. And if we're talking about the parabolic phase of the cycle, sometimes it begins earlier, sometimes it begins later. But in terms of how long this parabolic upside phase lasts, you can see here that we're in the third month of the parabolic phase in the cycle. And if we juxtapose that with 2021, then you can see that the third month is right over here. So this green circled moment. So we are in the parabolic phase of the cycle, this green box, and we're in the third month of that parabolic upside phase of the cycle. But in 2021, you can see that we still had many, many months, including down months, of course. Downside volatility is a part of the process. Spring and summer is part of the process. Winter and autumn is also part of the process. So up and down is just how things go. And if we've seen upside, then maybe a bit of downside is needed before we go up to new all-time highs again. But we have to understand that this downside is going to enable further upside going forward. And that is what 2021 suggests, but also 2017. You can see here that we are in approximately this orange circled moment here, and in 2017 you can actually see that there was quite a bit of rejection in these upside wicks for 3 months at a time, really. And in 2021 we saw also some rejection as well at these highs, a bit of upside. Here we actually saw a crash, but I don't anticipate a crash just like this just yet. But you can see that 2017, probably a really good corollary to what we're seeing at the moment, is we are seeing rejection here, an upside wicking. And that is just normal price action when it comes to the parabolic phase of the cycle, and that just needs to occur before we see further upside. But I just want to talk about these macro triangles, because the theory of the macro triangles is not a really sexy or interesting theory whereby it just says we're going to moon forever, but is supremely effective. Because if you look to mid-June 2022, I was talking about how we lost this horizontal, we'd see downside deviation here, and that we're going to search for a generational bottom, because historically, whenever we lose that horizontal, we tend to see a bit of downside trend continuation and trend acceleration, as I mentioned here in October, where trend acceleration is going on in an effort to find the bottoming out phase before further upside. And you can see that that really turned out to be a very good opportunity for dollar cost averaging and then enjoying that upside, which inevitably occurs after we breach the diagonal. So just going back to where we are now, we've broken this diagonal, we've rallied into the pre-halving, we had this post-halving reaccumulation phase. That post-halving reaccumulation phase tends to occur across every single cycle, and then we break out into a new rally, we break old all-time highs, and like I said, it occurs in every cycle, and it occurred also in this cycle, and then we enjoy the parabolic phase of the cycle, this green phase here. Really important to note that this is diminishing returns, so we're not going to get a copy-paste scenario with 2021, but even if we get to this portion, or even half of that, if we get half of that, that still means we have a bit more upside. Worst case scenario, we have half of that, and still there's a lot of upside left to go, because logarithmically this can even get us into the deep 100Ks. So you just see here how these macro triangles proceed upside for a considerable amount of time. And let's just measure the breakout point to the bull market peak here. Just notice how that breakout point from 2017 gets us very close. Look at that. Isn't that phenomenal just to see? Isn't that fantastic to see how the breakout point for the macro triangle in 2017, you can predict the top of the bull market peak in that cycle, and do the same thing here. Breakout point here from the macro triangle, and then bull market peak bang on right over here. And if you do this for this breakout beyond the macro diagonal, it just shows us that, well, we're going to peak later this year. And it also, probably most importantly, shows us that we have many more months left to go in this cycle. So it's a little bit premature to be talking about a bear market, that's for sure. And I just want to understand, or at least help you understand, so that we can understand this together, whereby where does this magic actually come from? Because after the halving, as I mentioned, very important reference point for price action in Bitcoin cycles, we tend to see Bitcoin top out in its cycle 518 days after the halving. That was the case in 2017. In 2021, the case was a little bit different, whereby we saw an additional month added on top of that. So 550 days after the halving, where we bull market peaked after the halving. So if we're talking about repeating history, at most adding 550 days to the halving, that would get us into an October 2025 area for peaking in this bull market, whereas we're 275 days, maybe 300 days, actually more like 275 days after the halving right now. And in fact, let's just do this here. I'd say we are 275 days or so, but next month, February, at the end of February, we're going to have to add another 30 days to this. But you just see that we're pretty much, if you think about this, historically speaking, we are essentially, and here's it's gonna hopefully blow your mind, we are, if we're 275 days after the halving, we have roughly the same amount of time left in this parabolic phase of the cycle. It's not exactly copy-paste because it is a little bit shorter than 275 days, but we still have roughly the same amount of time that we've already experienced here left in this parabolic phase of the cycle if history repeats perfectly. And thus far across cycles, it's been repeating pretty well, plus minus 30 days or so. And so if we have still 250 days left in this cycle, we have to understand that we're not going to see time wasting from Bitcoin like we saw in the post-halving reaccumulation phase. This was a bit of time wasting cutting into the cycle, and this was actually quite important to cool down the cycle, which was actually accelerated at that point in time. So if you even look at this portion of the cycle, that gives you a good idea that we do see a little bit of time wasting before we actually rally higher. Same thing here. We saw consolidation quite a bit here, lots of time wasting in the form of consolidation, but really important consolidation to cool down the cycle before parabolic upside occurs. And this is the first half of that 500-day period. But look at what happens in the second half of that 500-day period. We have very little time wasting. We have a lot of trend continuation and acceleration towards the upside. Any sideways period, any dipping gets us to new all-time highs and beyond. And even if we look at the second half of this cycle as well, we see a bit of downside for sure, that crashing, but still a lot of upside going forward. And so if we're going to be talking about the second half of the cycle, sure, maybe we do see a bit of reaccumulation in the meantime. Maybe we're even seeing reaccumulation right now. Maybe we do see a bit of downside in the meantime, but we're going to see uninterrupted upside going forward until we finally peak in this cycle. So the first half of this parabolic phase of the cycle, not very exciting. But the second half, that's when things are going to get really interesting and exciting. Upside galore for Bitcoin for sure. However, altcoins are going to be really popping off and rallying in a parabolic fashion, more so than Bitcoin. So an uptrending Bitcoin, and especially in the second half of the cycle, parabolic phase of the cycle, where it's really going to start rallying quite in a very parabolic way, still that's going to translate into money flow into altcoins, where altcoins are going to be rallying quite exponentially, and it's going to be a very exciting time. So the more we get to the end of the cycle, the more crazy it's going to get. And I think it's the wrong time to get demotivated, discouraged, because the best is still yet to come, and history seems to simply support that. So having said that, thanks so much for watching this video. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.